Imperial Holdings sees full-year headline earnings per share up between 30 and 40%. Operating profit is expected to be higher than the 3.3 billion rand in the comparative period in 2010.
Imperial market cap 24.3 billion, price earnings 9.6, dividend yield 3.6. Ron, let's come to you first. Really solid trading update from them. I'm seeing a lot of interest and activity in the share. They really very much are a play, the logistics company, they're a play on economic growth, very much into Africa with their CIC, the fast moving consumer goods, which they've got in Southern Africa. And that trading update says that they're making it work.
Absolutely. This is the next thrust of the growth, Simon. We've got some really good operating divisions. To me, one of the best performing divisions on a really great margin is Amalgamated Motor Distributors. They import Korean cars and the like. The margins are about 8.5%, 9% compared to the retail distribution of about 2.6%. Now, with the slowdown in Japan and problems in the supply chain, one would imagine that there are more cars available of that sort of breed with the disruption of pure Japanese cars. Looking at logistics itself, the operation which they bought is a gateway into Africa. Incidentally, they did buy it from the greater PSG group, now that we are discussing Zeda next there. They have the wherewithal in terms of expanding all the way up to DRC, Tanzania and the like. They're already quite big in terms of South Africa. The other logistics side, very, very interesting, is transport on the Rhine, where heavy industry in Germany is doing exceptionally well at this particular point in time. I think it's mainly waterway traffic and the like. The margins are lower, but as the German economy turns around, this could be a very, very nice growth area going ahead. They've managed to rid themselves of non-core assets like Imperial Bank, which took up a lot of capital and the like. It wasn't a core thing. I think that the aircraft leasing business could still be on the chop going ahead, not part of their core operations. They've done the right thing. Herbert Brody has downsized, he's right-sized, he's made an efficient group. I like this one. I think we can look at a 35% plus return for the current year.
Well, listen, over to you. I mean, taking a look at the Walmart story in the country, many are saying that the likes of Imperial could actually stand to benefit because of distribution and logistics. Do you think that it could be a positive, or do you think it could be a negative for the company if Walmart does indeed go through with the deal with Massmart?
I'm not sure that I would want to even relate those two. I mean, you know, your big earners here are your distributorship and your logistics. You know, there might be a little bit of spin-off into the logistics, but I wouldn't really want to put those two together. Now, the only point I want to make is we discussed Imperial probably less than 2 months ago, and that particular evening it was my hot stock. It was trading at about 116 Rand, and I said, look, in the first half it earned 725. If it only earns another 725 in the second half, that means it's going to earn 14 and a bit. Now, you're only going to go back to a year ago, and you'll see that they were earning around about 10 Rand 40. So 30% up sounds a bit lower than I might even have been looking for. But at the time I said, you know, if you put this thing on anything like a 10 or an 11 PE, buying it at 116, selling it or getting it to 140, 150, you know, that looked like, you know, one of those good stocks to me. So all I'm really saying is the trading update is confirmatory rather than anything.
Yeah. Well, listen, I mean, given the fact that Ron also mentioned that the company has gotten rid of its non-core assets, tourism makes a very small part of the business, but very good margins. We're looking at margins of around 12%. Do you think that it should beef it up, or do you think that it's time to look to sell?
I don't know. I definitely, I think, you know, they can by all means sell something if they've got something better to buy. But they have been quite acquisitive. You know, you've only got to get a Google search on Imperial and you'll find, you know, they acquired this in their logistics division, they acquired that in their dealership division. So it's not as though they've been sitting still at all. And I just think that's a sign of, you know, of good management. They're very patient, they wait for it. Again, as I said last time round, you know, I like this one, but the one that really has to kick in, I think, has got to be the dealerships, because there the margins are extremely low. But we have seen a pickup in car sales, and I won't be at all surprised to see that one coming through a bit better.
Okay, so listen, hot for you, Liston?
I'm saying for tonight, I said it was hot last time, and I'm saying it's hot, but let's see at the end if I've got hotter.
Okay, hotter,
Not for me on a further re-rating story. Listen is quite correct. There's 2 billion which has been put into building up in investments the year. They haven't been sitting and doing nothing. As Listen says quite correctly, when the right value proposition comes, they're there.
Hot for you, sir?
It's hot for me.
Wonderful.
Yeah, sure, absolutely. It's a bet on Africa, it's a bet on South Africa, a bet on good management. I like it.
Zeda Investments has issued a notice to Capespan shareholders of its firm intention to make a cash offer to acquire all Capespan shares not held by Zeda. Zeda currently owns around 27.7% of the outstanding shares of Capespan. Capespan is a leader in global fruit marketing and distribution and a provider of supply chain service solutions with operations in 34 countries.
Zeda market cap 2.4 billion, price earnings 13.2, dividend yield 1.6. Liston, let's come to you first in Cape Town. Capespan, a great operation, long history, been having a tough time of it, and certainly the announcement from Zeda said that they want to get in close and work and, I suppose in a sense, turn it around. You think there's going to be buy-in from shareholders? I'm imagining a lot of the shareholders are those fruit producers and the like who probably quite like their holding.
Well, yes, but I think let's just look at Zeda as it stands. Essentially it's a private equity item with a special emphasis on agriculture and food. And so Capespan was there before to the extent of 27%. Now they're saying it's probably at the right price and we'll buy it. Now, as it turns out, they make some very interesting comments about, how much the price they're offering is related to the price at which the shares have changed hands. Mm-hmm. I'm not sure how relevant that is at the moment, but they're paying 486 million for this, and that's using up their entire cash resources. At the end of last year, they had 206 million in cash, and their year end, I think, is February. So suddenly they're using 206 million in cash, and they're borrowing the other 280 to buy it with. Now, that's a very nice private equity, call it leveraged buyout situation, which we haven't seen too many of in South Africa. And my guess is that they've done some very good homework on it. And it is true that Capespan went through a very bad patch in 2009, but that's also not to say that it's been easy, in 2007 or 2008. Yes, so I think that what they're saying is, with a bit of extra management and a bit of whatever, we can do things here. But just to put that in perspective as well, the fruit side of it, it may be part of the business and it may be where part of the business originated. But it's not all that profitable. It's the logistics, it's the moving around and the being able to source and being able to deliver, which is the real money spinner here. So again, we talk logistics in Imperial. So I think we've got to at least look at the logistics here and say, is that being properly rated? Again, coming back to the price earnings multiple, I don't think that's particularly relevant in a private equity company like this. And especially since we know it's going to change. Of course, we're all, earnings conscious and we're all dividend conscious. But I do think, what excites me here is that this will become the third largest holding in Zeda. And that will be, after Kaap Agri, which has got Pioneer in it. And what's the second one? The Cape Vin, which has got Distil in it. So certainly what they've really done is they've given a third leg to the jackpot. Before it was basically just two horses in the race with a lot of other little bits, and now suddenly they've got a third leg, and I think it looks quite good to me, as long as, and here's the caveat, as long as they can make it work.
Okay, well, Ron, you pick it up. We've got around 3 minutes left of the
in
program.
broad terms, I agree with what Liston says.
Yeah.
I'm upstream on this one in terms of PSG. Yeah. PSG takes a lot of fees.
They're the real winner
here
in many senses.
Yeah, I've been in PSG for a long time, and everybody's been saying for years, too expensive. You've got the nice underpin in terms of Capitec. Yes, Zeda is small, Zeda will grow. The whole emphasis on food, agri, and to less extent beverages will pay dividends. But I think this is going to take a long time. You need to build up critical mass. The fees which PSG take are quite enormous in terms of a performance basis. They didn't get fees this time.
50 million odd last year.
Yes, and that's where the profits are going upstream into PSG.
Fair to say, not hot Zeda, hot PSG.
Absolutely, and we had this PSG discussion a couple of weeks ago on this program.
Coming to you in Cape Town, Liston, Zeda, hot or not?
I think it's hot. I'm looking at the share price, 190 a year ago, 250 now. Action and more action. I wouldn't be at all surprised if there isn't. If they see something good, they'll have a rights issue. I definitely think this is where people are putting a lot of money. And the real question for me is it other people's money, OPM, or is it my own money, MOM? And the feeling I get from the PSG side is that this is MOM. They're putting a lot of money into this. And again, if I had to compare it to Brait or Remgro, I'd say it's more in the line of Remgro, and their philosophy is good and sound and solid for me. So I really like this one. I'll actually make it hotter than Imperial.
And so it's in fact boiling hot for you because it's also your hot stock pick today. So definitely hot for Liston. And for you, Ron?
No, not. Going back to some of the underlyings, I've been a proponent for the last 2 years on Pioneer Food. I would rather be in the operating company, Pioneer Foods, than in this investment trust sort of thing for the short to medium term. Thereafter, the whole outlook might change, but not currently.
Okay. Simon?
Zeda, I like it. I like the upstream perhaps a little bit more. PSG make the fees.
Okay, so we know what Liston's hot stock pick is. Ron, your hot stock pick, you don't have much time.
Got about 20 seconds.
Altec.
My hot stock is Altec. To me, this is the beginnings of a massive classic turnaround in the company. You had some impairments, you had some once-offs in terms of Forex losses. The Kenya data works, and the whole East African scenario is on a massive turnaround. Operationally, it's turnaround. We saw profits dropping from over 100 odd million 2 years ago when broadband rates were very, very high. They've now normalized. From last year's 34 odd million, I expect that to more than double to 80 odd million this year. UEC, which is the desktop and the digital scenario, had a turnover of $1 billion last year, 1 million profit. I expect that profit to jump up to 40 odd million. Autopage has now been revamped. It's in a turnaround. Netstar, I would expect to see some nice, big, juicy acquisitions in emerging markets. Margins for the whole group have gone up. Big, nice dividend yield of about 5.5% odd. Looking for capital growth on that of about 20% over the next year, 18 months. Looking for a return of about 25% odd on that one.